Russia, Ukraine, it seems like it's the same situation as last week, pretty much, just kind of a standstill, or it's close to a standstill. It seems like the macro market absorbed kind of the initial shock, but in the last week or so, it's really kind of rebounded.
With the huge options expiration last Friday, and then the FOMC meeting, and kind of finally having a little bit of, it wasn't necessarily good news coming out of there, but more so just kind of clarity.
We put on a short-term index option trade for call options on the S&P 500 and the growth stocks, which are ARK Investments, ARKK. When we see a calculated risk or a lottery ticket that we think the odds are in our favor on, we'll do that.
To be more than, say, 2% out of the money on something that short duration is pretty inherently risky. So we knew there was a good chance that these could expire worthless, but we thought
that's why we only put 1 or 2% in. Yeah. And so we did the math, and I think if we said if the S&P 500 went up like 5%, we'd make like 10x or more our money or something. And sure enough, that's what happened.
Yeah, and those are the type of asymmetries that we're always looking for, where we think there's a higher probability on a certain event than the market is overall ascribing to.
The trade that it will bring up that we are losing on so far is also about 2 weeks ago or a week and a half ago. Separate reasoning was something called an iron condor. We just felt like after we closed kind of our hedges, we thought like maybe this is going to be a range bound market for the most part now that we've gone down so much. So much volatility on the NASDAQ. We sold some iron condors for credit. Iron condor is like selling a call spread and selling a put spread at the same time. And you're kind of locking in profit as long as it stays within this range. And I think it was like up or down 5% for the NASDAQ is what our range was from where that we put the trade on. The NASDAQ, was kind of near a low already. We didn't think it could go much lower. And we felt like if it was going to go up above 5% in the next month, then at least the rest of our portfolio would benefit more so than the extra 5 or 10% of that we'd lose from our fund losing out on that iron condor trade. That trade has worked against us because the market's gone up.
Like essentially, if it expired right now today, we would make almost all the money on the entire spread. I think it's very slightly in the money, so you lose a small percentage. But
that's now probably not going to happen. Yeah, there's a good chance it could go up another 5%. Yeah,
it could go up another 5%. But if it goes down another 5%, then we collect the whole premium too. So we're kind of playing with theta decay a little bit here too. We can start making money even if it just kind of stays sideways. It's something of a natural hedge against the rest of our portfolio. The idea of trying to generate a little bit of premium in the current market when there's just so much fear and volatility seems like the right move to make, as long as it's kind of within a controlled fashion.
Let's move on to Tesla. The stock, wow, rising fast. The Berlin factory is finally officially approved and open. This is like something I thought I might not ever hear.
Tesla's probably benefiting from a little bit more clarity around Berlin. It helps to kind of remove uncertainty. But it seems like this is kind of like a broader macro. Like everything on my watch list is green today, basically.
I could see, 500,000 deliveries plus for Q3 and Q4. I mean, that's pretty crazy. But I think the thing that most likely carries the stock forward is full self-driving.
That's probably going to take at least 12 months, I think, to make its way through, financials. Although I do think an underrated potential catalyst, which I tweeted about recently, is the fact that they're prioritizing deliveries that have FSD.
Elon's master plan part 3. Yes. How can we forget?
Oh, yeah. We should talk about that.
It's all about colonizing Mars, and you got to build the colony on Mars, right? You got to build a self-sustaining, and it's all about that with SpaceX. And eventually he's going to tie in Tesla to that.
I think that the thing that I get a little bit more excited about, I think there's a lot more like huge value creation opportunities coming out of the real world AI applications.
Every week we're like, maybe we're close to the bottom. Maybe we're close to the bottom. The market kept going down, and it was like it had been going down. Like growth in tech stocks in particular have been going down for like 3 months, like very consistently almost. Sure, we could still have a 5% down move on some kind of terrible news, but in my mind, and Matt and I have talked about it briefly yesterday, we don't think the risk for like a 10% plus downward move in the market is high at all anymore.